Back with you on the Market Day Report. Thanks for joining us on a Monday as we get the daytime session rolling here on the futures trade. Glad to have you with us. We are going to bring in a little expert help to help analyze our opening market trends this morning. And we're going to go to the phones and bring in Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky, and we'll talk about our opening trade. So let's go to the phones. And Dewey, thank you for joining us here this morning as we get a new week underway. First off, I would assume in your part of the country there from you northward, it sounds like they made pretty rapid planning progress over the weekend.
Yeah, that's right. We're probably looking at corn planting to be somewhere between 25 and 30% done here this afternoon. Of course, we got the weather, this week. Looks like we're probably going to fall back on that some.
Alrighty, so let's take a look at our opening prices here. We had a really terrible finish to the week last week on the grain trade. How are we going to do today? Well, as we get things rolling here this morning, we'll go to the futures board and look at the corn market. Dewey, overnight, this corn market was absolutely flat. It was just fractionally mixed, and now we have the May corn showing a price of $3.78 3/4 per bushel after having a low of $3.68.5. That would be 7 higher. July up 7 at $3.82.5. December up 7 at $3.88. What's going on?
Well, really, you have two groups that trade these markets. In the overnight, you have mostly your European interest and so forth. And then, of course, when we get into the day session, that's when your domestic interest, commercial interest, and also your funds come in here as far as the U.S. is concerned. And I've seen differences between night and day. So, yeah, we're trying to get a little rebound. You got to remember, we took some pretty hard licks in this market last week. We have got funds now in corn. They have reduced their position to about 240 million bushels, which is a pretty good whack that they did last week.
Interesting to see that kind of whipsaw action in the trade there. Kind of hard to keep up with it, but we do know, in fact, we just reported that the farmers were actively taking advantage of that rally that we had the early part of last week. So a lot of analysts have been telling me they're glad to actually see them doing that. Now, as we look at our soybean trade here, we'll pull up the futures this morning. And Dewey, we had the corn trading 7 higher. Meanwhile, the soybeans are only up about 2 3/4 on the May at $9.89 3/4 per bushel. July knocking on the $10 door. We're at $9.99. We're off our low of the overnight trade by almost 13 cents now. So we're up 2 3/4 cents compared to Friday's close. November new crop soybeans now 5.5 higher at $9.88.5. What do you think here?
Well, last week we had the funds were real active in the beans. They bought about 230 million bushels. That puts them long 595 million. That's the biggest long they've had in about 2 years. So I think, the market is just a little bit skeptical of a position this size here. So I think, we kind of have to get our land legs back here in this market before we can see things begin to settle down here. We're not done yet from last week's sell-off. We got to see a little proof on the pudding that the market is trying to indeed stabilize here.
All right, as we take a look at our wheat trade in Chicago wheat, we'll take a look at that July contract, the new crop contract. We're up 3 at $4.77 per bushel. That's off of our overnight low by about almost 9 cents now. Kansas City wheat on July is currently trading a half lower at $4.73 per bushel, but it's still well off of its overnight low by about almost 8 cents. Now, the wheat quality tour is going to be taking place in about, the next week, I guess, right?
Yeah, that's right, and of course that'll be the talk of the town when we hear the results of what that tour looks like.
And I did hear some rumors late last week from one analyst in Kansas. He said, now that those heads are popping out, we are starting to see some white heads from that freeze event that we had about a month and a half ago.
Yeah, and I'm sure that we'll get a little bit of analysis on how much of an impact that has had, with that tour here. Of course, we're expecting a little bit of rain, which will help improve conditions and maybe some of the other areas, though, too.
All right. Well, as we go into the break, let's look at the cotton trade. And on the July contract on the cotton, we're currently at 63.85. That's up 16 points. All right, we're going to be taking a look at our livestock trade with Dewey Strickler when we come back in just 1 minute. Don't go anywhere. We're back with you on the Market Day Report. I'm Marlon Bowling, and we're talking right now with Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. We're talking about the livestock trade this time, but before we do, I want to take a quick peek at the U.S. dollar value. That thing has been chopping around a bit overnight, and I just wanted to call it to your attention because it can have an impact on the ag commodity trade. Right now, on the dollar futures, if we take a look at that June contract here, we are trading at 280 points lower at 94.800. So that could actually be a little bit supportive to the ag commodity trade. We'll keep watching that through the day. All right, Dewey, we had the USDA reports Friday. We had the cattle on feed report that came out. The on-feed number at 101% was just as expected. The placement's a little light at 105% versus a trade guess of about 107.5%. And then you had the marketings at 107% of a year ago when the trade was looking for 106.5%. Most commentary over the weekend said they considered that to be neutral to slightly friendly. What do you think?
Yeah, I think that's pretty much right on in the ballpark there. Of course, be more friendly to your contracts like your June cattle and so forth because of the placement numbers. And, of course, the June contract is up a little bit today.
Well, let's go take a look. All right, let's go to the board and pull up the live cattle prices. And on the futures trade, now that we're off and running, we have the June, as Dewey mentioned, 63 higher at 115.28 per hundredweight. August now 53 higher at 112.08. Meanwhile, on the feeder cattle side of the equation, we'll flip over there, and we have the May contract down 30 cents at 142.15 per hundredweight. So a little weakness on the feeder side, led by the nearby April, which is down 90 cents. Remember, that one goes off the board on the 28th. We have the August contract down a nickel at 142.05. On the cold storage numbers, Dewey, it looks like the frozen red meat supplies were down 6% compared to a year ago. Beef was down 3% from a year ago. Pork down 9%. But if we look at the poultry, those supplies were 6% higher than what we had a year ago at this time. That should be supportive to the red meat, beef, and pork supplies here.
Yeah, that's true. I think, though, that the chickens are going to give the red meats a little bit of a competition here as we, progress through the summer because of these numbers. I think that the numbers did reflect that when the temperatures warmed up, we did see a little bit of increase in outside grilling demand. Okay,
now, as I did want to point out the cash cattle trade that developed late last week. Friday afternoon, it was a light to moderate trade, and USDA said that price range was about, maybe, I think the majority of it was about 126 to 128 that developed on Friday afternoon. We'll call the average about 127 in the volume there, but that was about $7 lower than what we had the week before. And dress sales were 200 to 202 per hundredweight, and that was down, I believe, $14 from a week ago, Dewey. So that's a lot of pressure there. Is that going to be acting like an anchor on this futures trade today?
I think that it will. I think it's going to keep some continued pressure on our cattle contracts here. I could see the June contract of cattle probably going down maybe a couple more bucks down into about the 113 before we've come up with a decent bottom.
All right, let's look at the lean hog trade. And on the lean hog market on the futures, we have the May currently down 90 at 74.80. June getting further away from that $80 benchmark at 78.35 per hundredweight. That's down 47 cents from our close on Friday. July down 43 cents. Does that spell trouble for you, Dewey, or not?
Yes, it does. If you notice, when you look at the charts, we had a reversal on the June contract of hogs here from about 80.5. You got a little continued weakness here today. Wouldn't be surprised if we don't come down and test the support area of around 77 or a little bit below.
Wow, interesting stuff. Well, Dewey, good to visit with you once again. I wish you the best. Hope you have a great day trading out there, and talk to you soon, all right?
All right, sir. Thanks a lot.
Dewey Strickler with AgWatch Market Advisors. He's based in Franklin, Kentucky. So there you have it. That's how things are opening out. Kind of a mixed bag on the cattle side there.
Much more trading ahead, though, as we head throughout the day.
Oh, yeah, just getting rolling.
All right. Thank you so much, Markets Editor Marlon Bowling.